the next 2 hours listening to this webinar today is what if in the next 90 days you could actually start servicing crypto businesses, or if some of you want to get a new job in this industry, what if you could get a job because you at least have a basic understanding of what crypto accounting is? You guys are all of you experts in accounting and finance, and you've been doing accounting for a long time. So now is really just to earn like how does crypto work? And it's very different. It's not what we are used to in traditional accounting. So that will be the focus of this webinar today. Um, Brief intro about myself. I'm based in Lisbon, Portugal. I'm also a qualified chartered accountant, and I worked for 8 years as an external auditor in accounting at Deloitte, BDO, and in the industry as well. At some point, I quit my job to because I wanted to understand the impact of blockchain in accounting. I saw this technology there, and because I'm an accountant, I try to understand it from an accounting point of view. I'm not technical, so I didn't really start to read like technical papers on cryptography because I just didn't get it. I was a bit frustrated in the beginning. But as soon as I started to look at it on how can we do the accounting, then I started to get it. And that was just the rabbit hole for me, which just made me more and more interested. So I started this project. That's why I started this project called The Accountant Quits. That's why it's called The Accountant Quits. I'm not telling accountant to quit. Actually, I'm telling accountants that there's this new technology out there, and we have to quit the old way of doing things with the technology that we used to, because blockchain is a new technology, and we need accountants to understand this. So 2 years ago, we also launched a crypto accounting academy, which is focused on really the practical knowledge of what you need when you have to manage a business using crypto. At the end of the webinar today, I'll tell you a little bit more of what areas we cover in this crypto accounting academy. And I'd also like to, like Sanjay had mentioned, thank Jitendra Bhatia, who is one of the students of the Crypto Accounting Academy and who introduced me to Sanjay. And Jeet is currently in the audience today. All right. So the agenda that we'll cover today, this is what I have. I was speaking with Sanjay and I was saying, I want to give you a little bit of the important areas. I will not go deep in any one of them, but there's one area which will be very practical, and I'll tell you what that will be. So first, we'll speak about the crux of crypto accounting. How is it different from traditional accounting? Then we'll go through Block Explorer. This is like a tool, which is, I would say it's the gateway into crypto accounting. It's where you should actually start. Uh, if you want to be a good crypto accountant, you have to understand Block Explorers. Then we'll go a little bit into crypto tax basics. I say basics because tax is jurisdiction specific. Every jurisdiction has its own laws. But I will speak about the concept of cost basis with respect to crypto. Then we'll speak about subledgers. This is a new word maybe for you. Subledger we are used to. It's very common in crypto that we call these tools subledger, crypto subledger. It's like a crypto accounting software, and we use it in combination with our main accounting software like QuickBooks, Xero, Zoho. We have to use it together because Xero and QuickBooks, they don't accommodate for crypto. I'll touch a little bit on the other tools that you need when you have crypto. Then we'll speak about accounting standards, and I'll just focus on IFRS for this session because I believe in the UAE, you guys are mostly using IFRS, and then we'll have a Q&A session at the end. So this is the agenda. Yeah, I hope you guys will enjoy it. And again, it's not going to be very technical. So Jay had mentioned this. I just wanted to mention this to start our webinar today. So the UAE has introduced this licensing framework through the regulatory body called VARA. So VARA is in charge of regulating, supervising, and overseeing all digital assets activities. And they are actually approving any virtual asset service provider license, the VASP license. So that means the UAE now is well positioned to welcome companies who service like this industry. And there's, if you go on the public register here, I just have a link here. But if you go on this link, you will actually see all the companies who have the VSP license in the UAE right now. These are some well-known projects like Mantra, OKX is an exchange, Zan is a crypto-friendly bank, and Binance is also an exchange. So you can actually see, and there's more and more companies now coming to the UAE. And what does that mean for you guys? If you have an accounting practice, what does that mean? That means you have to start servicing these companies for their accounting, tax, advisory, filing, everything. So this is where the opportunity lies for you. But now you have to understand how does crypto work. I know it's intimidating, but that's the purpose of our session today. Um, So we'll start with the crux of crypto accounting, and by that I mean why is it different or how is it different? So these are like the four quadrants I see of what you have to know to be a crypto accounting. The first one is Block Explorer. You have to understand cost basis, like the FIFO, LIFO, WAC that you're used to with tracking inventory. It's the same. Subledgers that I mentioned earlier, and then accounting standards, of course. So the new topics that you need to know are block explorers and subledgers. Cost basis and accounting standards you already know of. You've studied these already. But block explorers and subledgers, you have not studied it if you've never worked in crypto. So this should be the area of focus for you, at least to start. So how does crypto differ from traditional accounting? What you can currently see right now, and we'll go a little bit more into detail on this screenshot that you can see right now it's a transaction on the blockchain. I had sent a payment, someone, um, but it's on the blockchain. Like there's no bank statement that's the difference with traditional accounting and crypto accounting. With traditional accounting, when you have to prepare your financials, you take the bank statements, you book the journal entries, straightforward, or you take a custodian statement, you book the journal entries. But with crypto, because there is no bank in between, so there's not that intermediary bank to give you that bank statement, you have to go on the blockchain to retrieve all those transactions. So really the challenge with crypto accounting is on data collection. And every blockchain is different. Like Bitcoin, Ethereum is one of the popular blockchains, and Solana. But there's so many other blockchains. There's, I don't know, more than 200, 300 blockchains easily at this point. And all of them, their block explorers are quite unique. I'm seeing some chat here. Okay. All right.
You
Um,
can continue. No,
all right,
Will
perfect.
handle it. You can please continue.
All right, perfect. So for us accountants, this is where the challenge lies. And as you can see right now, if I went to see this transaction, I see something called transaction hash. I see a long string of numbers and letters. This is a unique identifier of my transaction on the blockchain. This is a unique number, and I have to go on this blockchain. And if I copy paste this number, I would see it there. Um, and let me go to the next slide because I'll show you a little bit more about how the Block Explorer is. Um, okay, so quickly on this. So with the crypto, you have different data sources. You have Block Explorer that I just mentioned. You have other exchanges like the Coinbase, the Kraken of the world, all these exchanges. You have wallets and you have custodians. So you have to compile the data from all these different data sources and import them into the subledger. And I'm going to show you later on during the class how we do that, how we import those information from the Blocks Explorer into the subledger. And then you will export those into your main ledger, which is the QuickBooks, the Xero, Oracle NetSuite, Sage, because these tools, they don't accommodate for crypto. So you have to convert everything into fiat, like USD, dirham, Indian rupee, whatever, and then export those into your main ledger. So this is like the flow how crypto bookkeeping is. So we'll start the session with block explorers. But first, before I speak of block explorer, I don't know of the level of knowledge of everyone today who has used crypto in the past, who has not used crypto in the past. So I just wanted to say a quick word on what does custodial versus non-custodial mean. Before you service crypto, even before understanding crypto accounting and block explorer, the most important part to understand is how custody works with crypto. So you have two different systems. The one called custodial is just how a bank would work. Uh, yeah, like you go and you open a bank account, you place your money in that bank, and the bank owns the money. It's on the bank's balance sheet. And a crypto exchange like Coinbase and Binance, it's exactly the same. I'm trusting that third party with my money, right? So if tomorrow something happens, like we've seen in the past, there were exchanges that were liquidated. Like, for example, if you remember, there was a very famous one called FTX in the US. So when things went south with that exchange, a lot of customers lost their money. They could not retrieve it because the exchange was unable to repay its customers. So that's one model that the good thing with it is it's easy to open. You have a customer support. If you forget your password, you can reach out to customer support and they can help you out. And then there's the other model with the non-custodial way. And one of some of the very popular wallets that you can use, if you've heard about this term wallets, everyone speaks about wallets in crypto. Some of them is like MetaMask or Ledger, and these are all non-custodial wallets. When you create a new wallet for the first time, you will have this thing called this seed phrase that you should never reveal to anyone. You should keep that safe, and it's the only way for you to access your funds. So the good thing with it is no one can actually touch your crypto. As opposed to the exchange, you will always have control of your funds. This is the beauty of blockchain. But with it also comes like you have to know how to safeguard and protect like those that seed phrase so that you don't share that with anyone because if you share that with someone, they can steal your funds. So in crypto, that's why we have this very popular phrase called not your keys, not your coins. So in the custodial way, you don't control your private keys of your wallet. The private keys, for now, just think of it as like the seed phrase, the way to access your funds. So if you don't have control of it, you don't really own like those coins. Um, so I just wanted to have yeah, mention that very quickly. So block explorers, and I will show you in the next slide how it looks like, but think of block explorers as like the Google of blockchain. It will show you all the transactional data for that particular chain. And like I said, uh, one blockchain like Ethereum, they can have multiple block explorers as well. So you can go on different block explorers it has to give you, in theory, the same data. All the block explorers have to give you the same data for that specific chain. Um, so I will show you how it looks like by actually going here. Can you see my new screen with Etherscan?
Yes.
Yeah, okay, perfect. So I will give you a very quick summary of what you have to know here. So here you can see address. This is like my wallet address. And um, if you're servicing like someone who has crypto on the balance sheet, the client will give you like their wallet addresses. And you can think of this as like your crypto bank account. Like it has all the transactions that I did with this address. So if I'm sending money from someone to another, I will see this transaction here, right? And um, if I scroll a little bit down, you will see ETH balance. So this is because this is an Ethereum wallet address. I just went on Etherscan, which is the block explorer for Ethereum. And because it's on Ethereum, it shows me here the Ethereum balance, the Ethereum value, and it shows me the different coins I have in this address, right? So if you've been trading, or if you're familiar with I mean, if you have a MetaMask, you've made payments, you will already know this, how to navigate this block explorer. So here you have different tabs, and just the one I want to go through is the tab called Transactions and the tab called Token Transfer. So the tab called Transactions, it will actually contain all the different transactions involving ETH balance. So if I went on a different blockchain, like if I went on a blockchain called Polygon, let's say, it will show me here all the transactions in Polygon, right? And if I navigate to this tab here called Token Transfer, this as an accountant is the tab that you'll be spending most time with, because the token transfer ERC20, it actually shows you all the different um, inflows and outflows that you did with this wallet address. So I'm actually gonna go through one transaction with you. So if I open this transaction hash, and this transaction hash that I open is on a different blockchain. This one is called Polygon, this blockchain. Um, and so it has its own block explorer. And in this transaction, I was actually sending $150 to this wallet address. So just the way to interpret this is you would have the sender, the from, and you would have the person with whom I sent the funds and interacted with or to. This is actually the address of the token that I sent. In this case, I was sending this token called USDC, and this is the USDC address. All right, I just wanted to quickly show you this because um, if you just see this and you have to do the accounting for your company, you have no idea to whom they send this. Like, who's this wallet address? It doesn't give you the company name, or it doesn't give you, you don't know what's the nature of this transaction. What was this being paid for? Was this a salary? Was this a marketing expense? You don't know. But you have to know this if you have to prepare your financials. So this in the next slides, we're going to cover how we can actually label all these transactions. How can we know the nature of these transactions? Um, yeah, so this is why I wanted to go through Block Explorer. I don't want to spend too much time here because if you've never done crypto accounting, this part can be a little bit boring. So I want to show you the practical side of it. But what you have to understand is uh, in the Block Explorer is where you would have like all the transactions of your wallet, all the transactions of your client, it will be here. All right, I'll go back to the slides. This was a this was like a 5-10 minutes intro into Block Explorers. But in the actual course that we do, we go through most of the different types of explorers, Ethereum, Solana, other blockchains. There's one called Cosmos. We provide a technical analysis of how to interpret different types of transactions. With crypto, for example, if you are um, there's this word called bridging. If you're sending funds from one blockchain to another, that is said we are bridging funds from, let's say, Bitcoin to Ethereum. You can do that. So we go through like how to interpret those transactions. We go through the concept of decentralized finance. So DeFi, you can lend or borrow funds into these decentralized finance platforms, you can say. So we go through how to identify those transactions. We go through how to reconcile on-chain data to the ending balance. And because blockchain, it's cash-based, and accounting is done on an accrual basis. So we learn how to reconcile the two. Um, because let me just give you a quick example. So if you're invoicing like your customer and you've not received the money yet, um, with blockchain, you're only going to see that at the moment that the customer pays you the funds, but you still actually have to record it in crypto into your financials. So we go through how to reconcile the two. So that's the part I wanted to cover on Block Explorer. The next part is on tax basics before I go into that software that you should use called the subledger. So with regards to cost basis, every time you purchase an asset or you receive crypto, the cost basis is you can say the value, it's the cost price of the crypto when they were received. Um, there's this concept of called gas fees with crypto that I didn't go through when I went through Block Explorer. Maybe I should. But every time you send a transaction, you have to pay a certain transaction fee, you can say. So if you're using a bank, the bank charges you a transaction fee. But on the blockchain, the network charges you gas fees. The beauty of it with blockchain, it doesn't really depend on the amount that you send. If you send like a million, $10 million with your bank, you're gonna have like a percentage fee with on that amount that you send. But with blockchain, it doesn't work like that. It doesn't depend on the amount. So you could just pay a few cents, even though you're sending 10 million, 100 million on the blockchain. And that's why this technology has been so exciting because of the speed of it and because of the cost. It's so cheap and it's so fast. And that's why everyone is using it. So when it comes to gas fees, I don't want to spend too much time here, but you can actually either choose to capitalize it or you can expense it. Most companies expense it because it's very negligible, the gas fee. And the way you will calculate the cost basis if you would take the tokens received multiplied by the fair market value price, and this becomes your cost basis. We will go through an example. Okay, so this is a very simple example, and then we'll go through a more complicated one. So let's say you purchase one Ethereum with cash on September 2022, and the value of that Ethereum at that time was $1,700. For simplicity's sake, let's just say there was no fees incurred. So what would be the double entry for this transaction? Very simple. I would debit um, Ethereum in my balance sheet by 1,700 and I would credit cash. Now, 1 month later, I traded 0.99 ETH for 1,980 USDC. And the price of ETH at that time was 2,000. And of course, this time I had to pay some fees, and I executed this trade on a platform called Uniswap. If you are familiar with DeFi, you would know what Uniswap does, but you can go and trade your crypto there in a decentralized way. It's different from the Binance or the Coinbase of the world. So what would be the double entry in this scenario? The most simple one is you would have to now credit the originally recorded entry for 1,700. So I would start here. I would credit that because I just sold it now. So I would credit that. My next entry was because I traded it for 1980 USDC. I would now, and USDC is a stable coin. I would now have to debit stable coins by 1980. Because I had a fee of zero point 0.1 ETH, I would just debit gas fees and the basically the difference is a gain on this transaction for $300. So this is a very simple example because I just purchased one and I actually dispose one. But in practice, it's not the case that it's so easy, right? So what if you have multiple purchases and dispositions? So in this case, what happens, I will go through this example, but one of the concepts that you have to know of when you start to do crypto is the concept of cost basis. It's the same as what you've learned and how you have to track inventory. So every time, so first, if you have like, if your company has crypto, you have to choose which cost basis you will follow. So you can choose FIFO, first in, first out, LIFO, last in, first out, WAC, weighted average cost. Um, some jurisdictions actually specify what cost basis you have to follow. Like in the US, for example, FIFO is the recommended approach, and a lot of companies there use FIFO. So I will go through this example here. Is what if you've purchased like a lot of Bitcoin, and how do you then calculate the gain on disposal? So in this case, in this spreadsheet that you can see, I hope it's big. If not, okay. Um,
It's visible.
it's visible. Okay. So in this case, I've been buying Bitcoin during the year. So on the 1st of Jan 2025, I started buying Bitcoin. I bought at on 4 different dates. I bought it, and then on the 20th of Jan, I decided I need to sell 4 Bitcoins, and I sold it at 24,000. So how do I calculate my gain or loss on disposal? So let's go through like each line. So on this one, so I purchased it for 15,000, and this will be my cost basis. And as you can see right now, the price of Bitcoin is actually increasing. So it was at 15K, 19K, and then 21K. So the price is increasing. So since I'm using a FIFO method here, I would have to dispose the first units I acquired first. So in on the first line, I acquired 1 Bitcoin. So this will be the first unit that I will dispose. Second, 1.13. And the third, I dispose if I aggregate like the first 3 lines, I arrive at 4.98, but I only need to remove 4. So in the first line, I remove like the entire lot, 15K. In the second line, I remove the entire lot, 22K. But in this one, I just have to prorate it. So I had bought 2.85, but I'm actually selling 1.87. So I just have to prorate this to the initial cost basis that I had, and that's how I arrived at 4 units of Bitcoin disposed. So when I do this exercise, the total cost basis that I have disposed is this amount. And if I take the fair value of the Bitcoin that I disposed, which is 24 times 4, 96K, I arrive at a gain on disposal. And it makes sense that it's a gain on disposal because, like I was saying, the price of Bitcoin was increasing, right? So as double entry is going to be pretty simple. I'm going to debit my cash, credit my BTC Bitcoin account, and credit my realized gain. So there are different methods, and this was FIFO. We can go through another one called WAC, so weighted average cost. So with WAC, the what's different is um, in the way you would calculate like the cost basis, every time you are making an average of your costs. So for example, if I go in line number 2, I arrived at this amount. My total cost basis is the new ones that I just purchased for 22K plus the previously acquired cost basis. The total is 37, and my average cost basis would be the difference or uh, the average at that date. So you cannot see a big difference right now because it's also a gain. The price of Bitcoin is going up. Uh, but basically, yeah. So here I would take my 4 Bitcoin disposed multiplied by the average cost, and this is how I would arrive at the cost of Bitcoin being disposed of. Um, Okay, so this is what I wanted to show you guys on cost basis. This is a very important concept to understand if you are doing crypto tax, but also if you are doing the accounting. Now, with cost basis out of the way, okay, so I think this is maybe the most interesting part of this presentation today, which is how do you use these subledgers or these crypto accounting softwares? This is the practical part of the webinar that I think is new and it will be interesting. So, what's the purpose of this subledger? Um, so the first one I was showing you earlier, this block explorer, that this is where you have to go and see your transactions, but it's very difficult to have to do accounting from the block explorer, just the block explorer. Usually people, they could be doing it with a spreadsheet. You can export all those transactions from the block explorer, upload it into a spreadsheet and do the accounting there, but it's more tedious, it's more manual, it's for me, it's much more time consuming. So these tools, they facilitate that. So it allows you to also label all transactions to identify what's the category of this. Was it an income? Was it an expense? What kind of expense was it? You can also create different rules with those ledgers to save time, so you don't have to manually label all transactions all the time. Uh, you can automate the cost basis calculation. So if you were doing your crypto accounting in Excel, this example that I just showed you earlier, when I was buying Bitcoin and then I disposed 4 Bitcoins, I have to manually do this. But these softwares, they automate all that process for you. And then they allow you to sync all those transactions as a journal entry into Zero QuickBooks. And then they also provide you with some reporting. So in the next slide, yeah, let me just actually show you the example because I think it's better to understand. So there's a lot of different subledgers out there. Just like the accounting software market is very competitive, but for for this example today, I'm using a subledger called Breezing. So, oops. So let me just go on Breezing. Sorry. So this is how right now the subledger looks like. So what are we going to do? Um, I'm going to be creating a chart of accounts, a crypto chart of accounts, in Zero. So I'll do that in Zero. And then I'm actually going to link that chart of accounts into this subledger. And then I'm going to import some wallets. Some of those wallets that you saw here that it's not very human friendly. I'm going to import those into Breezing, and then it's going to become easier for crypto accounting, and you'll see. So the first step, what you'll have to do if you're using like a subledger like this is they all have different UI and UX, but at the core, they all allow you to do the same thing, which is to categorize your transaction and to sync them into like Zero QuickBooks. So the first step that I have to do, I have to link the subledger with Zero. For this class today, I'm using Zero. I could have used QuickBooks. I could have used Zoho, anything. So I already created a company called ICAI Dubai here. I'm going to allow access. I'm going to click on Get Accounts. And once I do that, the subledger right now, it has pulled the chart of accounts from Zero. This is everything that you have in Zero. But what we want to actually create crypto specific, a crypto specific chart of accounts, right? So I'm going to go back to Zero, right? And I'm going to create those. I would love if you could also do that, but that maybe we can do this in the future. But right now I'm going to go in chart of accounts and I'm going to create some different crypto specific accounts. So let me create a few. So for example, I'm going to create an Ethereum account. Sorry. the code. I'm going to create an Ethereum account. I'm going to click save. I'm going to create a few more. I'm going to create another one for a stable coin, 1002. This is for, let's say, USDC. I'm going to create, let's just say, um, I also have USDT in this balance sheet, so I'm going to create one for USDT as well. One for USDT as well. And the last one that I'm actually going to create is because in this wallet, I have a lot of other crypto tokens, but they are very insignificant in amount. So I want to lump everything into just one account. And because I don't want to have one chart of accounts for each crypto token, I could if I want, but for this one, I just want to lump everything. So I'm going to create another one called other crypto asset, right? This will be my fourth account. So I just created four different accounts, which will go in my balance sheet. I actually need two other accounts because I'm doing crypto. The first one is for my gas fees. But I explained this concept earlier here. Every time I'm sending like crypto, I have to incur some form of fees, which is in your transaction tab. So it's actually here. You can see those fees here. So for this transaction, this was the amount of fee that I paid 0.000466560 ETH, right? And this had a very small dollar amount. So the dollar amount for this was actually $1.1. So it is actually an amount that I have to record in my P&L. So I will have to record this. So I'm gonna add an account here in my expense. Let's say I call this 601. Yeah, it's available. I'm gonna call this gas fees, right? And I'm going to create a second one. You remember we went through the example of tax with the different cost bases. So I'm going to create one called realized gain or loss. So I'm going to call this 602. I'm going to say this is realized gain or loss. I'm going to save. So now we have six accounts, six new accounts that we've just created, right? Realized gas fees, realized gain or loss. Great. So now I can go back to my subledger and I can link my accounts again or refresh it rather. So when I click on get accounts here, you can see that it just sent these new crypto accounts, crypto specific codes that I just created, right? And 601 gas fees and realized gain or loss. The next step that I have to do in this tool called Reason, I have to go in settings and I have to designate this gas fee account that I created. This is so that this tool, this subledger, it knows that every time there is a gas fee, what account it should post this amount to, right? So company fee, I'm gonna designate gas fee. Company net gain or loss, I'm gonna designate the realized gain or loss. And I could have, if I wanted, created a separate account for gain, a separate account for loss. In this example, I just created one account and I'm gonna hit update. So that was the first step. We linked the chart of accounts and I designated which uh, account has to go under gas fee and which account has to go under realized gain or loss. Great. So the next step is I can actually import a wallet address, right? These wallet addresses that I showed you here, right? So I'm gonna add a new wallet. And just for this class today, I've actually pre-populated some wallet addresses to make it faster and more simple. But you can actually also upload like your address from an exchange or any other blockchain. Usually when you would be, if I had not pre-populated these demo wallets right now, you would actually, the UI would be a little bit different. But let me just go ahead and you would actually see what blockchains you are importing those transactions from. So I've just imported one for my operations wallet, right? I'm going to quickly import another one for my treasury wallet. And once that is done, I will show you what you actually have to do. Um, cool. So right now we just uploaded one wallet for treasury and another one for operations. And for treasury, for example, here it summarizes everything that I have in this wallet. Now I'm trusting this software to actually tell me how many tokens or what's the amount of token I have. But I can actually go on the blockchain and double check this, whether the software is telling me the truth. So if I click on this wallet address of this treasury wallet, and I actually go to the same block explorer I showed you earlier, and I paste this wallet address here. So now it's showing me the amount of funds in this wallet. So if I look at the tokens here, and I'm seeing DAO Maker, I have 69,906. So if I go back into Breezing DAO, I will see 69,906. So it is correct. I can do that for all tokens, but for this exercise today, I'm just going to check a few. Let's say I want to check the next one, Eternity 199972, 19 ERN 199972. If I also want to check the ETH balance, 0.662464. And if I go back here, 0.66. Okay. So this is like the first step as a crypto accounting that it's very important to do this. You should not just blindly trust the subledger that you're using because sometimes there can be mistakes if you're using like some more exotic chains, let's say, other than Ethereum. So that's the second step that you'd have to do. The other thing that you have to do in this software before we start to actually import those transactions into Zero, there's another step that you have to do here is I have to go into asset and I have to designate an account again. So I created an account called ETH, right, in Zero. So I'm going to choose the account I created for ETH. I'm going to do that for the other tokens I created an account for as well, which was the next one was USDC and the other one was USDT, right? And for everything else, I have to lump them into this other crypto asset account. So maybe if maybe I'm going a bit fast, but what you can see under assets here, like the software, it has automatically pulled what tokens I have in these two wallet addresses in treasury and operations. It's telling me automatically what are the tokens I have, right? So I'm going to select like all of them. I'm going to select this, and I'm going to add them into um, I'm going to add everything into my other crypto asset account. I'm going to click save. And now everything is lumped together into my other crypto asset account, right? Cool. The other thing that you can do is you can actually come and identify these wallet addresses, like who are they, like who are these wallet addresses? Let's see if this was a wallet address that belonged to Sanjay, let's say. If this belonged to Sanjay, I would just click here and save. And now if I would go um, and if now I would go to search for this, like this wallet address, if I would filter, if I would filter by If I would filter by Sanjay, for example, like I would see exactly what transaction was pertained to Sanjay. So in this transaction here, I was receiving 0.34 ETH, right? The equivalent was 616 US dollar from Sanjay, right? Um, so this is what I want to tell you about context, but let's go ahead and actually go and label one transaction. So what you can see here for Treasury Wallet, it's the same thing that we can see here, right? But because we're using this tool, we can now come and label like all these transactions. So let's go ahead and label one, and let's actually then sync it to zero. Let me go in my operations wallet. Let's say for anything, I can just select, um, let's say this one. Let's just say this one. So in this case, I was receiving 1,000 USDC, and I'm gonna go and I'm gonna click on this transaction. And for this transaction, I'm gonna mark this under a sales transaction. Let's say this was like a sales transaction. So I'm just gonna click on sales here. I'm gonna click on save, and I'm gonna sync this into zero. And we're gonna see what happens in zero. So the transaction is synced to zero, and now I can go into zero. I can view this transaction as a journal entry. And this is like the beauty of it. So I just synced like a transaction which was on the blockchain. I categorized it into a sales account. So it credited my sales account and it debited my USDC account, the one that I created earlier, right? And if I were to post this, if I'm happy with this and we added like a description for it, if I were to post this transaction, and if I were to go in my balance sheet, let's say, right, I would see my USDC has been posted here. So this is what I wanted to show you. This is how you get from the blockchain into zero. This is like the flow. You don't have to use a subledger, but it makes your life easier, I would say. And the good thing with like these subledgers, let's say I'll show you another transaction. Let's say I can also, let me just filter by outgoing, let's say. So these were all the outgoing transactions. Now uh, let's say this transaction, 125,000. Let's say I categorized this as this was, I don't know, advertising, right? And the good thing is I can also actually uh, advertising for crypto conference, let's say, right? I added an accounting description, and this accounting description will be displayed into zero. So if I save this right now and click on sync, there's two things I want to show you with this transaction. The first thing is, yes, it's correctly being grouped under advertising, but the other thing that I wanted to show you is the gas fee. So the software automatically recognize the gas fee into the gas fee account. This is what we did earlier by designating the the company fee account to this code in Breezing, right? So this is like the beauty of it. Otherwise, I would have to come and manually recognize this gas fee. And it's if you are paying people with like these stable coins and you have transactions every day, this can quickly become like a nightmare to like recognize like each transaction. So this is the good part of using these subledgers. Um, but in this case, I will show you a third example because in this case, we are not seeing the realized gain or loss because in this case, I was using USDC, which is like, it's actually it's kind of pegged to like $1. In theory, there should not be, I mean, there will be a difference, but let me go through another example. Um, Now, let's say if you recognize this as advertising, but later you realize like, oh, that was a mistake. It was not advertising. It was actually legal, right? The good thing with these subledgers, it's very simple. I can just go back. Okay, there's no legal. Let's say it was something else. Let me just go down. Let's say it was subcontractors. You made a mistake. It was not advertising, it was subcontractors. So I go back, I click on save, I go back to my journal. And when I go back to my journal, I can, okay, then update it, but it should. Okay, for some reason it didn't update yet. Did it save? Transaction updated. Yeah, for some reason this didn't update right now. I will have to check it with the subledger what happened, but usually this would update from advertising to subcontractor, right? Now I will show you a third example here because I want to show you the example of realized gain or loss. And let's look into a trade actually for this one. So for this transaction, I'm gonna filter by trade. Let me clear all filters. Let me go into my treasury wallet and I'm going to filter by a trade. So a trade is anything where I was, let's say, swapping like one crypto to another, right? So in this case, I was swapping CVX into ETH, right? So I'm going to select this transaction. I'm going to, Breezing has a very simple way of doing it. So I'm going to choose token base here because I created my zero chart of accounts in token. I'm going to choose token. And once I sync this transaction, if I sync this transaction into zero, and if I go into zero, now, these are the journal entries that I just calculated for that specific trade. And this is what I wanted to show you. This line called realized gain or loss. Again, it automatically um, creates this line item for me of 18.62. It calculated the realized gain or loss on disposal. So in this example, I was actually swapping CVX, a token, into ETH. And CVX, we had lumped it into this other crypto asset account, right? That's why it's appearing under other crypto asset. But ETH here, we do have one account that we created for ETH, and that's why the other entry is in ETH. I'm not going into detail about this, the debit and credit here, but I just wanted to show you how it automates like the gas fee and the realized gain or loss, right? So this is what I wanted to show you on the subledger. I showed you an inbound transaction and I showed you actually a trade as well and also an outbound transaction. So three different types of transactions we went through. And again, there are like also rules that you can create. Like for example, if I wanted to, if I have a wallet address, if I had a wallet address and if I had like a wallet address or let's say a chain or a wallet address, and I wanted to say every time I receive funds from this wallet address, like where should it go, right? Um, so I could say that every time I receive funds from, let's say, if I had a wallet address for, let's say that was NFT income or whatever income, I could say every time money touches that wallet, you should recognize this as, I don't know, other income, or let's say we created something for NFT income. So it would automatically do that, which is, it saves you quite a bit of time once you create those rules. So this would depend. Every company has different business activities. So this would vary for every company. All right, so this is what I want to show you guys for the subledger part. Um, Again, to summarize, why do we use a subledger? Because it helps us to aggregate the data from all these different data sources, like your exchanges, your wallets, uh, DeFi protocols, your custodians, everything, you put it in your subledger, and then you sync it to QuickBooks, Zero, Oracle, whatever, right? I hope this was cool because if you've never done crypto accounting, this is what I said. It's your new best friend. Like the subledger is your new best friend. It's the most important tool that you need to understand when doing crypto. Now, this was subledger, but there's also other tools that you need to know of. Or maybe that your client would be using. You might not be using it to service your client, but let's say if you are invoicing, making payments, you have to use these tools. So there's many different types of transactions when it comes to crypto. Like payments, of course, token vesting. It's something very similar to stock option vesting. But this one is just in the case if you have a token, staking income, swapping, NFT. I've listed a few here, but the point where I listed this was there's so many new tools now built for crypto. Like if you're invoicing, you can use an invoicing tool for crypto. Like you don't have to use the bill.com because they don't actually integrate crypto. So if you want to use bill.com, there's some workaround that you have to do because they've not been built for crypto, right? You cannot just create an invoice for Bitcoin there. You cannot create an invoice for Ethereum and have someone pay you within the UI of Bill.com and crypto. You cannot do that. But you have new tools for all these different categories. And I will show you actually some of these tools. So tools pertaining to billing, treasury management, spend management, corporate cards, there are new tools on the market for this. And on the website of the Account Quits, so if you go on the Account Quits Resource Center tools, there's actually 45 different tools that I've listed here to help you do like not just accounting, but to really do the operations, the financial operations of the company. So you can actually filter here by different categories. So if I were to filter by ARAP, so actual, if I go on actual, this is a tool that allows me to manage my accounts payable and accounts receivable. And some of these tools are free, some of these tools are paid, of course. Some of them have trial periods. You can actually test those and just see how they work. You can create an invoice in crypto and you can pay someone in crypto, and you see then how you uh, push these like the information from actual, let's say, into like Zero QuickBooks or into the subledger. And there's so many different tools. I've not used all of them, but I'm familiar with what they do. Uh, the one that has the most tools is obviously Subledger because we are focused here on accounting and subledgers allow you to do accounting. So I showed you Breezing earlier, right? But there's so many other subledgers on the market today. One of the well, most widely used subledgers, let's say, are Crypto. Breezing is one of them. Bitwave is also well used in the US. Integral, Tress, those are all very popular subledgers that you have on this page. So this is what I wanted to show you for the tools section. This is very important. I always say this, if you're using crypto, don't use I call them the Web 2 tools, and these I call them the Web 3 tools, right? These have been built for crypto. It saves you time. Um, Sometimes some of them can be a little bit more expensive than the traditional tools, but they actually do save you time. So I'm going to go back to, and the good thing, just one last thing, the good thing is some of them offer you deals. For example, Breezing offers you like a deal. You can get 2 months for free, like it's a trial period for 2 months. Crypto, the same thing. You can have a 1 month free on an annual subscription. So you have these different deals. Some of them offer, not everyone. So you can go through them, test it out for free. Um, All right. So I included this life cycle of an on-chain transaction just for you to think how a transaction from the blockchain lens into your financial statement. We went through those earlier through that breathing example, but let's just summarize everything because maybe there's a lot to understand. So we spoke about the different data sources, right? The wallets, exchanges, custodians. Then you would have like these other tools that we went through here. All these different AR, AP, wallets, tax, subscription, subledger, whatever tools. You use all of those and then you account for all of them. Here, this part is your subledger. You track, you label all these transactions, and then you push them into your Zero or your QuickBooks. And that's how you prepare your financial statements. That's the financial statements you provide to your auditors, and that's what you use for tax. This is like the flow of it, how it works. Um, right. Okay, so I hope this was clear. So the next part is actually the last part, is on the IFRS treatment of crypto. Uh, so all of you guys are accounting experts. This is like the accounting standards are obviously the part that you're very comfortable with. So when it comes to crypto, there is no crypto specific accounting standard. There's not one accounting standard for crypto. What we had to do is we had to um, interpret them and see under which one of the existing accounting standards they can actually fall under. So the first time the IFRS looked at this, I just put here like um, a time flow of when it actually started and where we are. So we started in 2018, but this is like the important update that happened in March 2019. The IFRC published an update on how crypto should actually be accounted. Um, it's not very comprehensive, but it's what we have at least to account for crypto. And at that time, we determined that crypto should fall under intangible asset. And in April of 2022, they decided that they will not add crypto to their work plan until 2026. So what we have, those guidance that was published in March of 2019 is what we're actually still using to record crypto, to account for crypto, at least until 2026, until we have a new update. So very quickly, I just wanted to go through how we arrived to crypto should actually fall under intangible asset. So there are a number of questions that the board asked themselves. They first considered, should crypto actually be considered as cash? But they determined that no, even though it's like of digital nature, you can think of some of them like they do behave as cash, but in order to be considered cash, crypto must first be legal tender. And it's not legal tender in most of the jurisdictions around the world. The only one I know of is El Salvador, where Bitcoin is actually legal tender. The next one is it a financial asset? No, because it does not give the holder a contractual right to receive cash or another financial asset. Think about Bitcoin. If you have Bitcoin, if you're a Bitcoin holder, you don't have any contractual right to receive cash because you're holding this Bitcoin, so it's not a financial asset. The only exception I want to say for financial asset is stable coin. So if you hold like a stable coin like USDC, actually the company who minted USDC, the company is called Circle. They do have a contractual right to repay you your USDC, your USD fiat. So in that case, stable coins, I won't say all stable coins because all stable coins behave differently, but something like USDC or USDT, the most widely used stable coins, they actually fall under financial asset. The next one, is it plant, property, and equipment? That's pretty obvious because they're not tangible. The next one is it inventory? And the decision here is that yes, you can account it under inventory if the intention is to sell it in the future, and then it would be recorded under IS2. So nothing very different to how we use IS2 for your other items that you're familiar with. And the last one is it an intangible asset? And yes, it seems to meet like all the criterias to be recognized as intangible because of their uh, them being digital. Um, I have not listed all the requirements here to for an asset to fall under intangible, but if you go in the requirements set out by IS 38, it does meet all those requirements. So it can be classified as intangible. The only important distinction here is that it's actually recognized as an indefinite lived intangible. So usually the intangible items that you're familiar with, like your software, your licenses, they have a finite life and you have to amortize it every year. But in the case of crypto, they are considered to have an indefinite life. So you don't amortize, but if you don't amortize, what you have to do is you have to test for impairment every year. So that's like the difference. So oh, I've actually summarized like the accounting treatment, but it's nothing different that you're currently used to. So if you are using if in your company case it falls under inventory, you would initially recognize it at cost and subsequently measure it at the lower of cost and the NRV. And any movement above the cost, you won't recognize. Any movement below the cost would be in your P&L. Now, if you decide to recognize it under intangible, the important distinction here is that you can either choose a cost model or a revaluation model. I won't go into detail here on the like how do you determine if you have an active market, but when you use a revaluation model, you do have to check whether there's an active market for that asset. Assets like Bitcoin, Ethereum, yes, they do have active markets, but there are other thinly traded assets where you have to determine whether there's an active market, and there's a framework which is not very different to what you're already used to. So in this case, yes, you would recognize it at the fair value less accumulated impairment, and any other movements above the carrying amount would go in your OCI, which you guys know of this already. So this was actually the last slide. I will go through the academy in a bit, but this was the last slide where I wanted to provide you guys with a very quick intro into the world of crypto accounting, right? So we went through block explorers in the beginning. This is like a key area that you have to know of. We went through cost basis, another key area that you have to understand to realize your realized gain or loss. Every time you trade crypto, you swap, um, you make a payment, that triggers a realized gain or loss event, and you have to calculate it. That's why it's important to understand that concept. I showed you how to use subledgers as well. Very, very important tool if you're doing crypto accounting. If you have clients who are interested with crypto, they don't know where to start, and they come to you, the first thing you should see is you should tell them we're going to implement all your crypto activities into a subledger. That's your first task. And uh, this is what I also want to say. There's not a lot of accountants today that understand how to do crypto accounting. This is like it's in very niche. It's still very niche. We expect the adoption of cryptocurrencies to gradually increase over the upcoming years. And one day we believe that everything will be powered by the blockchain because it's cheaper, it's faster, it's just a natural evolution of the technology that we have. So accountants, you guys are, I would say, you're watching this webinar right now. This is maybe for a lot of you the first step that you ever saw how transactions in crypto actually arrive in your P&L and balance sheet. Maybe you didn't understand everything. I went a little bit fast, but the important point was I was not expecting you to understand everything, but I just wanted to trigger some form of curiosity from you and interest that you think, okay, this is an emerging area. I don't know much about it, but I can learn it and I can start to specialize myself. And in a few months, in a few years, I can also be an expert in this field. There's not a lot of accounting firms right now who actually offer crypto. I know one in Dubai. I just know one accounting firm in Dubai that does crypto accounting. But there's a lot of them popping up in different jurisdictions. What usually happens with these crypto accounting firms, let's say you're based in Dubai and you have a potential client, but their accounts have to be filed in the US, right? And you don't file accounts in the US. What you can do is you can do their crypto implementation into the subledger. You do the monthly bookkeeping, but only the annual filing part, you work with like a local provider in the US and they do the filing. That's how a lot of the companies that I know of, they work. So they work with all the other local accounting companies for filing, but they do the crypto work every month. Um, I included this slide here. I said we need more accountants, and that's why I'm so happy that we have so many people in attendance today watching this. And thank you for investing this time. This chart is inspired from, there's a very famous marketing book that I like called Crossing the Chasm. And this is a marketing book and it speaks about how a new product or service that you launch gain traction. And we, like with crypto, I would say we are still here, right? We are still in the innovator. The innovator, you still have a lot of the tech people, the developer who are developing these technologies using blockchain. And then you have the early adopters. I'm like one of the early adopter. You have other accountants who are early adopters who understand this technology. And we are not there yet. We are not there where you have the majority of the population like using crypto. But we are here and we have to like cross this chasm, right? And to reach out to like those other companies. So that's why we need like so many accountants because every company needs an accountant. Every company has to have like their financials prepared and filed. And that's why we need you guys. So I think this is a tremendous opportunity to learn crypto accounting. Like I said, we are all accountants and we don't have to, in the beginning, understand the technical part of it. What I would suggest is just find one client. If you're an accounting practice, just find one client you can actually tell them you're not like an expert in crypto, but you're willing to learn it as you progress and you have an idea of what tools you have to use. And there are people in-house that can actually work on this. And you just need one client, and that will basically make you become more confident, and then you'll be able to onboard your second crypto client. And there's a very good or very popular conference happening in Dubai very soon called Token 2049, right? And I'm actually going to be attending this conference. Um, so I'm going to be attending. I'm traveling from Portugal to Dubai. I would highly recommend you if you want to meet other people in this space. This is a very good event. A lot of like very solid projects and people who actually know what they're talking about will be present there. So I think it would be a good opportunity for you to meet other people, and probably a lot of them need like to sort out their accounting. They don't know how to do the accounting because a lot of these companies in crypto are like small startups, and some of them are launching a token, they are like developing a new idea. But most of the time, the accounting is a bit forgotten. Like everything around back office, some of the companies, they start to think about accounting a year, 2 years, 3 years after they've launched, right? So usually when you start, it's like a mess because you have to bookkeep transactions from like 1 year, 2 year, 3 years. Some of those transactions, people don't even remember what they did. They just sent a payment here and there. So you have to do a lot of cleaning in the beginning. But there's not a lot of companies who specialize in this. So this is the opportunity for you guys that I wanted to share. This is a good event. Okay, I'm going to go back to my slide. Uh, what do I have else? Okay, I'm gonna quickly go through like how the academy looks like, and then we'll take Q&As. I think you guys have a lot of questions to ask me. So the first thing is I have a weekly newsletter. with the accountant quiz that I sent. I actually share different tools, different articles, different interviews I'm doing, workshops, other workshops. So if you guys would scan this QR code right now, it would bring you to the weekly newsletter website. You have to put your name there and you have to put your email, and then you'll be subscribed, and every week you'll be receiving this. I'd highly recommend this because I also speak to other experts and then I would summarize the conversation. I also post like jobs, remote only crypto accounting jobs, accounting and finance jobs, basically roles like head of finance, accountant, CFOs in Web3. And there's so many roles like those. So that's this part. The other part, just before I we open Q&A, Sanjay, is I just wanted to mention about this Crypto Accounting Academy that we are running. And this Crypto Accounting Academy is actually also accredited by the National Register of CP sponsors in the US, so NASBA. And so if people want to claim CP credits, they actually can. And we are in the process of actually also making it CPD certified. So if some of you guys need CPD points, so people actually get 20 CP points from this course, which is half of what you need for 1 year. So very quickly, what we cover in this Crypto Accounting Academy, it's 7 week long, this course. Today, I showed you a very, very brief snippet of what block explorers are, what accounting for chain transactions are, but this is a much more comprehensive course. So it's for 7 weeks. Every week we have classes, sometimes once a week, sometimes twice a week. The classes are 2 hours long, and we provide you with exercises. I can actually even show you how it looks like. I think it's better. So let me share this. This will take just 2 minutes. So I will quickly show you how the module actually looks like. So this was cohort 5, the cohort we were currently running right now. And if I show you like the Block Explorer section, these were like all the different sections that we went through. And usually after each section, we would provide students with exercises and there would be quiz questions as well. And people have to pass it. So it is a pretty well structured uh, course with like all your different modules here. And at the end, you can claim your certificate. So you can claim a certificate and add it to LinkedIn if you want. And for each one of them, we give you access to different tools for crypto, like the subledger you saw. There's other tools that we give you access to. For example, there are some enterprise wallets that you need to know how to use, provide you access to those here. Uh, accounts receivable tools, payable tools, provide you access to those. And and yeah, after each one of them, you have exercises basically to test your knowledge. And you can also interact with the instructors because this course is happening live. And and the next one is actually starting on so this is like an overview of it, what you get. Who is it for? The Crypto Accounting Academy. If you're a Web2 accountant, like traditional accountant, you're a very good accountant, you've worked many years in audit accounting, but now you want to learn crypto, you're new to it. The first step was listening to this webinar, but if you're interested and curious and want to learn more, this would be for you. Or if you've just started working in Web3 and basically want to improve your knowledge, uh, most of our students are accountants. Some of them sometimes are not accountants, but they just want to understand the accounting part. And you can actually go on the website and see like all the students here. So if you go on the website,
Omar.
you will see all the students and you will actually see like their reviews here.
Thank you, Omar.
Right, Hassan. Right, Umar.
Yeah.
Yeah, Omar.
So
Thank you very much, Umar.
Please go ahead. Go ahead. Go ahead.
Thank you, but I think we have now time because the vice chairman also need to move, and I really requested him to stay for next 30 minutes to have the Q&A and the panel discussion. Thank you very much, and I request all the audience, if they like the project or the today's webinar, please give him the virtual applause, because we have a lot of questions which already we have received in advance, and now I can see in the chat box also there are a lot of questions also here. So, Umar, I think the key learning from today is the block explorer and the importance of having the subledger and how you can sync it with your accounting tools. That was really good, I would say, the good tool. Every accountant, they want to move to the crypto accounting practice, and they can definitely look for that one. So, next to the question answer, I think I have few questions already in hand with Mr. Tushar Jeshrani. Yeah. Tushar, are you here today? Okay, the question from his side is came that how do we get comfort on the existence of the digital assets? Like a bank account, we get a bank information for
Aniket,
the.
your voice is
Really
breaking.
cover that in your presentation, but at least you can give the answer to again the specific answer.
Yeah, of course. Okay, your voice was cut, but I think I got the question. It was the question that you had shared with me earlier. So, as an auditor, how do you get assurance over the existence assertion? Um, it's a very interesting question. So with crypto, the most difficult part, and that's why there are not a lot of auditors providing crypto auditing service, is providing assurance on the existence assertion is not the most complicated, but the one on the ownership assertion is actually the most complicated assertion to prove. On the existence, let's say if your client has like crypto, they provide you with the wallet address. It's pretty easy to go and check like that this exists, like on a block explorer. If like let's say the client has they've put money, they've lended some, they've got like a large amount of stable coins and they put that money into a DeFi protocol. A lot of them do that because you can get interest in return. You don't just like how you keep your money in the bank, let's say you get a small amount of interest. If you hold like a large amount of stable coin in a wallet, you don't get any income from that. So a lot of them, they put those into these decentralized finance protocols and then they earn interest. So typically what the auditor would do, they would have to check for recovery of assets. So they would check for if that protocol is promising like an interest. Has they actually made those payments? You would go and check existence through also recoverability. So has interest payments been made? Is the smart contract code functioning as intended? And that you can check through recoverability. The difficult part is more difficult is actually ownership. How do you prove like your client actually own these funds? If it's on an exchange, you can see they own the funds, but if it's like on a public wallet address, how you can actually prove that? And a lot of auditing companies like the Big Four, but also the smaller one, they've developed some kind of proprietary tool to check for ownership. How do they do that? There are two ways how they can do that. One is a little bit more expensive. Let's say your client has 100 wallet address, 1,000 wallet addresses. How do you check for each one of them they actually own these wallets? And you have to as an auditor. One step you could actually ask them, can you send funds from one wallet to another? But if you have like 1,000 wallets, this is pretty laborious. And for each transaction, you will incur like gas fees. What auditors do, they can actually in a different way. Um, um, I forgot the name exactly of this tool that one used, but basically how it works is they would send you a transaction and they would have you sign the transaction. So by signing a transaction on the blockchain, it actually would prove that you own the private keys of that wallet. And by owning the private keys, meaning you actually own those wallets, and you can do that for 1,000
Yes, and
wallets. Yeah,
yeah, just one thing. Sorry to interrupt you there. So,
yeah.
like if there is an encrypted message which is sent through the wallet, and if there is a response which comes in which confirms that yes, we hereby confirm that this encrypted message belongs to this particular client, that definitely proves the ownership. But for example, issue we have as auditors is I can, being the owner of the wallet, I can show this to two different auditors in two different companies, right? So with banks, we get it as a direct confirmation, wherein the company name comes in and that wallet can, that bank account can be linked to that company. But in a wallet, if I want to do a fraud, I can show that this wallet belongs to company A Limited, and I can get an encrypted message, yes, it belongs to me, and show it in A Limited, and the same wallet balance I can show it in B Limited. So where do I get that ownership where it belongs to this company, and is that possible?
Um, I mean, usually you would also see transactions in that wallet address, and that those transactions would also have to be reflected into your financials. So I didn't fully understand your question. So if there was one wallet address of a company that they claim they don't actually own it, or how would you prove that they actually own this wallet?
So Umar, actually, what exactly he's right. Tushar bhai, there is a problem with that. Address you can verify, yes, the ownership is there, but since an address never links it to the ownership, it can be shown in two different wallets. Even the encryption message is sent to confirm the keys or to confirm the coins. Yes, it can be sent through both the companies. That is where VARA has come in. If we talk about UAE, VARA has come in, and VARA is ensuring that KYC is done and you are recording against which address, who is the actual owner of the coins are. So Vara is working on those lines. The challenge which you're talking about is actually the challenge right now in the market, and that is why if you see the crypto is not getting that recognition from the government, because yes, we can verify the
Right.
number of coins, yes, we can see the value, but we are not able to link it to the ownership. And you can manipulate with that ownership into multiple companies, and no one will be able to come to know about it. VARA as authority in UAE is trying to create that KYC norm so that you can verify it as an auditor. You can certify with comfort that yes, I have verified and this belongs to this. So let's wait for some time. VARA is covering it right now. Still, there are companies which is lying with crypto coins outside VARA. They will be penalized for it, and then we will have more streamlined way. Still a long way to go, but yes, it is under the radar of VARA.
I agree.
Yeah.
Yeah. Thank you, Umar. Thank you, Jay. Okay, now second question, though it has been already covered by Mr. Umar, but this question for you, Mr. Jay. The crypto is considered a stock in normal business terms. I mean, you would like to cover it again? You want to throw some light on it, please?
Okay, quickly, because obviously, Omar, lovely job. And you said you are one of the early adapters. Let me tell you, I have heard somewhere that intelligent people adapts the changes faster, and that is the reason we are humans now. Otherwise, we were supposed to be monkeys. That is the evolution, or that is the adoption which made us human. And intelligent people does that. You are one of the intelligent guy I'm seeing who is early adoption of these cryptos. So thank you. Very enlightening session, and you have already covered it. Let me cover it again since the question has been thrown to me. Sanjay ji, stock can be interpreted in two ways. I say stock is one, when you say stock as a chartered accountant, I relate to the inventory. Second, I also relate it to equity stocks. We can also term it as equity because stock is also called equity sometimes. So yes, it's not an equity until unless you say that these cryptos are backed by equities, or it is tokenizing a equity of a company. It will not be called equity. So, and which is not the case with blockchain, Ethereum, other currencies right now, which is prevailing in the world. So it is not equity. Talking about inventory, Umar has rightly pointed out that if you are trading into it, how does you define trading? It's because it's your behavior pattern. If you are doing transactions on a regular basis with the crypto, if you're buying, selling, that will show, or that will be reflecting in your wallet or with the exchange from where you are doing the transactions. So if your behavior pattern is of trading, that will be considered inventory or stock. But if your behavioral pattern is more of holding it, once you have purchased it and you are not trading on a daily basis and you are holding it for a longer period, that will be considered as intangible assets, as rightly said by Omar. So please do not consider straight away as inventory. IFRS is something which is the guidelines for UAE. In IFRS, right now, limited guidelines, but it says please consider it as intangible assets if it is not, if you are not doing trading on it. And if you are doing trading regularly, please consider as inventory. So my answer is yes or no, depending on your behavior.
Thank you, Vice Chairman, for the lovely answer. The next question is by C.A. Shahendra Jaishwar. I'm not sure it is directly linked to our session today. what is I want to understand is it right time to invest in cryptocurrency? If it is, then which crypto and how much of the portfolio should be invested in crypto? Who would like to take
Yeah,
it up?
that's a difficult one. I don't like to give investment advice, but the only thing I can say, the best time to invest in Bitcoin was in 2009. But if you've missed that, the next best time is today.
Thank you. Jay, anything from your side? Any
Uh,
guidance
I
for
agree to
investment?
that. I mean, best time is any day where you start off. I mean, if you want to start your journey of crypto, you have to do it today. Because think about the kids who will be born in future. For them, the journey starts only when they are born. So for you, if you have not done it, please start your journey with a small amount, experience the crypto world, and you will get a hack of it. So start the journey today itself.
Thank you. The next question is from CA Mohan Das Balakrishnan. That is not related to again in the crypto. He's asking about what is the best ChatGPT, Gemini, or Copilot. And from a security perspective, do you think Copilot has an edge over the others? Jivai, I think you agree on that because Copilot became Microsoft product, it definitely will have edge on security perspective, right? What's your opinion on that?
Look, I mean, you're asking the wrong guy. I'm a bit of Microsoft fan because I have seen the technologies coming in. Yes, they create their awareness, they create that market, but at the end, who takes up the larger share is Microsoft, and the reason is user access or ease of access by the users is something which Microsoft does it. Right now, Copilot is at very nascent stage. If you're talking about other tools, ChatGPT has actually a large volume of data and which it is consuming to give you better answers or automate the process. Copilot still has a long way to go, but in the long run, yes, Copilot will be the tool which will be capturing the market in terms of volumes.
All right. So next question is from C. Ashit Dugar. He's asking related to crypto again. How do we value the tokens? Can any access be tokenized? This is for you, Mr. Umar.
Yes, I think any assets can be tokenized. We've actually last year or for the past 2 years, we've seen a lot of developments in an area called the tokenization of real world assets. So a lot of companies right now, they are, and I know there's a very popular project in the UAE called Paxos. So they have this stable coin, let's say, called USDL. And when you hold that USDL, the collateral, they actually invest it in US Treasury bills and they pay the users, the holders of USDL with those returns from those T-bills. So just by holding a stable coin, you can get some form of return. So a lot of these real world assets are now being tokenized. There's a lot of there's property, there's real estate as well being tokenized, and there's a new concept called fractional ownership. So it allows anyone with $1 to buy a property in the US, in I don't know, in Peru or in Australia, like is the concept you put the property on the blockchain, and this just like the internet, it democratizes access to information. Like blockchain, it democratizes access to investing as well. Like anyone can just come and just invest in like a variety of assets that previously it was not accessible. So yes, any for me, I think any asset can actually be tokenized, and we're going to see more and more of that. um, Regarding valuation, so if you have crypto on your balance sheet, a lot of times, I mean, those tokens would be listed on websites like CoinGecko, CoinMarketCap, and when you use those subledgers, they actually integrate those pricing sources, so you don't actually have to manually convert it. But let's say if you have a token and that price is not public yet, you sometimes you are working with like different valuation specialists because it's not public, maybe because you haven't launched the token yet. So pre the token generation event that happens, so then you'll be working with like a valuation specialist. There's one, if I'm not mistaken, called Technos Associates, which actually do this. Yeah.
In the interest of time, Sanjay bhai, I'm just taking over from you. I have an interesting question for our audience. Umar, 15 minutes are left. One question from my side. Many of my participants will be having this question. They have heard about cryptocurrencies. They today understood the accounting of cryptocurrencies, where exactly it get classifies and how exactly the subledger can be used as a accounting tool. The question will be, if the person has not started the crypto journey, which wallet or which exchange or what steps you will recommend to start the crypto journey with a small amount, and what small amount that can be. As a starter, as a fresher, from where my member who only knows about crypto wants to start
Yeah.
journey, from where he can start and how can start and what is the cost involved in it.
Yeah, very, very good question. And let me see, because I remember I shared like some steps. Okay. It's very easy. So you don't need a lot of money to start playing around, because it's one thing to buy Bitcoin or buy Ethereum with like an investing mindset. So you're buying it with hoping that one day Bitcoin will be at 200K and you'll make a profit out of it. But what I actually need from you guys is to just take like $50, $100, and the way that you put those on the blockchain, this is how it works. So you open an account on an exchange, a crypto exchange, any one of them, like a Binance, OKX, Coinbase, Kraken, anything. Then you transfer like $50 from your bank account into like this exchange, right? But to really understand crypto, you should not leave it on the exchange. The exchange is, like we explained, is just a bank. So you should actually, once you've done this, then you create a wallet. Then you create a wallet outside of the exchange. The one I mentioned to earlier, like MetaMask, is the most widely used wallet. You can open a MetaMask wallet. Then you transfer those $50 from the exchange into MetaMask, right? And this is where the fun starts, because then you have to understand each blockchain, like you cannot transfer $50 from Ethereum into Polygon, let's say. Um, you have to like bridge the assets from Ethereum to Polygon. Um, then what I will ask you is, once you have those $50 like sitting in that wallet, you can create another wallet within, like add another account and have another address, and actually start to make a payment, like make a payment to yourself, transfer $1, and then go on like a DeFi protocol. Like a very popular one is called Aave, double AVE. Just go there, put $2. There's no KYC, there's nothing. It's very open. You just go, you put $2, you check, like after one day it accrues interest to you, even if it's a few cents. You're seeing what's happening. Then you close that position, and then you see, oh, I received like some interest. Then you go on the block explorer and you see this is what just happened. Then think, what if I had to do the accounting? Like Umar, he speak about the subledger, so I could get all these transactions into a subledger, right? So just by doing a few,
Okay.
like I could share a little bit, because I was opening an email because someone had asked me this, and I had actually shared like many steps with them. I could also send you like these steps by email, and you could distribute it to like all the participants.
I'm looking forward for that email, and we'll circulate with all the audience who has joined today. Just to recap it, open an account with Binance. In UAE, Binance is already available. If any of the members is interested, open an account with Binance, transfer $100 to Binance, and from there you can go to MetaMask, transfer that fund, open an address, hold that currency, Bitcoin, and that's the start. After that, you can play around it, but $50 if you want to try it. Binance is one app, and from Binance move to MetaMask. These are two applications where you can actually try your hand and say, I have tried. Yes, Explorer will come, but I think that will be gradually, we will pick it up. That is your start of the journey. Sanjay bhai, back to you. You can ask your questions. I just wanted this.
Okay, I think that's a great question. I think this is the very need of the hour. Like people want to understand how to start, and now Omar has gave the solution with $100 you can start a crypto journey. So next question is, I think Mr. Chirag has asked, which we already covered, but again, I want just to, how significant are Block Explorer for the accounting, and also tips on using them. I think you already covered through Block Explorer and the Subledger. So anything further
Yeah.
you want to add now, or we can take it? A few questions in our chat box as well.
We can
Yeah, I
take.
think it's the most important tool to learn when you start to use crypto. Like these sub ledgers, they make your life easier. So you don't actually have to go and read everything from the block explorer, and it shows you the transactions there. But sometimes the sub ledger, because we're still in very early days, sometimes they can make mistakes or sometimes they're not complete. So you actually, as an accountant, have to understand how to read them. And yeah.
What can I add there? Okay, how many of you seen bank statement? In sometimes when we see a bank statement and you download a bank statement, the column which we call particulars or details, sometimes it's not making any sense because those are banking codes which is showing there. M/INF/0002882/71, and there is a deduction of 50 dirhams. I don't understand anything on that particulars. We may charge it at bank charge other stuffs. Please understand, Block Explorer is nothing but a bank statement. Since bank is not there, it gives you the transaction, what exactly the transactions you have done, but in a language which is not understandable or not readable or legible between you and me. That is a legit transaction, but we are not able to read it. Bloxburg just gives you the transaction. If you want to integrate uh, subledger, if you will integrate the subledger, that is your ERP or you can say accounting software, which will make your transaction accounting easier, which will help you in reporting. That is why subledger comes into the picture. So when you talk about Block Explorer is not giving you accounting. It's giving you just like a bank statement, a view of the transaction which is stored there. That is what Explorer does. Sanjay?
Thank you. Wonderful explanation. There are a few more questions. I think we already covered, so I will pick it up something. Mr. Rajiv Nanda wanted to understand Bybit cold wallet was hacked. Is it safe to keep your assets in your own wallet rather than a custodian? How is it done and accounted?
Um, okay, so for the Bybit, mm, I have not fully examined like the cause of this hack yet, so I don't want to comment too much on the hack, why it happened. But in the case if you're a company, you should not be using wallets like MetaMask. There are other enterprise wallets that you should be using. Actually, the wallet that it got hacked with, I know it was through a wallet called Safe. Safe is one of the most widely used wallets. I don't know the exact reason of this hack, so I have to get into it. But there are other wallets in the industry that you can use. There's one called Fireblocks, which is the most widely used enterprise wallet. Ledger, of course. And yeah, those are different wallets. I mean, we go through those like in the course as well, how companies use wallets, because just like a bank account, when you make a transaction, you have different bank signatories that would sign a transaction. The same thing on the blockchain. If you're sending like a million, $10 million, you cannot just have one person sign it. So there are different, we call those multi-signatory wallets. So every transaction that you create, different person has to come and sign, like the CFO, the CEO will come and sign that transaction. Um, yeah, so definitely, there's a lot of like wallets for enterprises, and this is how companies like are transacting millions in crypto every day.
Okay, thank you, Rahman. Okay, can we see an example of accounting entry for Bitcoin that is interesting? So you have to debit the Bitcoin as assets. How do is it clear? Question is clear.
I didn't fully hear you. I think your voice was frozen for a bit, but I think you
So
were
can we
asking the accounting entry for Bitcoin.
that is mined?
Okay, I mean, it would be pretty much the same that we explained earlier. I mean, if it's mining, like you would have to determine, does that company provide like mining services? Is that part of the nature of the business? If yes, like that would be recognized as a mining income, like in their P&L. And basically, the Bitcoin that would be mined would just go in the balance sheet and would be accounted for under intangible asset. This is like a simple, I would say, pretty simple accounting. The more complex accounting comes from when you are using like DeFi. Those are like a little bit more complex, but in this case, yeah, just debit BTC and credit mining income.
Okay.
All right.
I have to add there, Sanjay. I will say yes. Umar has already shown Arslan. I think you joined a little late. When the deck comes in, PPT comes in. I'm not sure whether that was a part of the Excel or the PPT. There was accounting entry where he purchased not the Bitcoin, but he purchased Ethereum and then he sold it off or converted or transferred it to some other currency. That was part of your Excel or Google Excel or Google Sheet. Please share that with our audience, and that covers Arslan the accounting entry completely, the purchasing part of it and as well as the sell part of it. Mining, yes, it will always be an income directly without, because it's not a trading activity. You have just earned it. You did the mining, you got it, and you just record it at the market value. So it becomes your income and goes into your asset. So that will be the accounting entry for the mining activity.
Okay, very
Fine.
interesting.
Wrap up.
Sorry. So, how safe are subledger? Do they have access to keys to the process info? And the question is in the authenticity or the security of the subledgers. You just shown us the breezing one, right? So, how I mean, do they have
Yeah.
access to keys to the process, etc.? Yeah.
That's a good question. So actually, when you're going out to choose a subledger, it's a good practice to check whether they are SOC certified. So a lot of them are SOC 1, SOC 2 type 2 certified, which would actually give you assurance that an independent party has come and they've gained assurance on like how different internal controls have been implemented, because that's actually a document that the auditor, the external auditor, would be asking at year end. Otherwise, if they don't have like those SOC reports or ISO reports, that would mean like the auditors would have to spend more time to gain assurance on whether the data that the subledger it's saying it's collecting from the blockchain, whether that's accurate. But those SOC reports can actually save some time there and also save you some audit fees because they'd have to spend a considerable amount of time more to gain assurance on whether the subledger is working as how they say they should be working. On the tools website, I've actually also have a filter for SOC. You can filter per SOC and you can see which subledger has a SOC report.
All right. So, we'll take up the last question for today. I think you gave an example wherein this crypto companies they don't do the proper accounting, and after 2 to 3 years they realize okay they have to go back and do the transaction recording. I think with regard there is one question, a very interesting question from Mr. Mohammed. If we are accounting at a later date, how do we value each transaction and rely on which subledger?
Mm. I mean, the subledger, they would be able to provide you with a historical price of that token. So 3 years ago, the subledger would provide me with the price of Bitcoin 3 years ago. And I mean, how can you rely on which subledger? I mean, you have to shop around and you have to do trial like maybe on a few, but like I said, the top sub ledgers on the market, like the ones on the website, Crypto, Trust Finance, Integral, Bitwave, Breezing, those are like reputable because reputable companies use them is like I've also used them, but also very reputable companies use these sub ledgers. Like MetaMask, for example, they do their crypto bookkeeping in crypto. Uh, and imagine MetaMask, how many millions of transactions that they have. Every time someone buys like crypto, they get like a small fee from that, right? A trading income. So they automate those through those subledgers. And I mean, they we yeah we've it's been a few years now, and they're just getting more and more robust, these tools.
All right. I mean, there are a couple of questions, but I think it's already been covered. How to do accounting for the Bitcoin mining. This was already been covered by the Chairman, Sri Jayapika Raghuwar and Umar. Your Bitcoin asset will be debited and your mining income will get created. So, I think I don't see any further question. Okay, see, Dheeraj just asked, I think this is a very small question, how we can open non-custodian account.
So non-custodian, you like a wallet like MetaMask, for example, but there's other like wallets. But for example, if you just go on like metamask.io, you have to install an extension. There's a Chrome extension that you have to install. And then you just go on that Chrome extension. I forgot the exact steps, but you have to create wallet. As soon as you create that, it will show you with those 12 word sequence that you call it your seed phrase. Just write it on a piece of paper, but usually, yeah, you don't save it like on your drive. It doesn't have to have online access. Write it in a secure place. Uh, if you're just gonna like be playing around with like a few bucks, it's okay. But don't. The idea is you don't have to share this seed phrase with anyone. If you shared those seed phrase with me, I would be able to go and move those funds basically, right? So just keep that to yourself.
All right, I think there are not many other. I think there are not no any question left. I think we have covered most of the question, and we already now coming towards the end of the session. Any further final closing remark from the Vice Chairman, Shri J. Prakash Agrawal? Anything further from your side?
You're
Uh,
currently
uh,
muted.
Sorry, I was on mute. I was saying interesting session. I love the session. I love the thought process. Trust me when I say that this crypto is something which will evolve as we move forward. Yes, all the concepts which we discussed today may not, our brains may not absorb it. We may not agree to it, but somewhere we have to start our journey. When I always say in my examples that when we thought about emails will be the official way of communication other than letters, brain was not ready to accept it when it happened in 90s, but today email is considered as a communication tool, official way of communication. Similarly, somewhere going forward crypto will be coming in the streamline. Obviously there will be regulations, as Tushar bhai said, because I can see him on the screen as well. He said yes, ownership is a question right now. The questions are there, they will be addressed, and then you will see crypto coming in a big way, or at least will be accepted a way of doing a transaction. We need to understand that concept. We need to understand the accounting of it. If you have not started the journey, please at least start a journey with a small amount. There is a way to start it before the train goes off the platform and you say, this is the new generation which has come in and I'm not able to adapt to it. This is the right time. Start adapting it. There's no harm in testing. When you test, you fall, you learn. Please start that journey. Thank you, Sanjay ji, for running such a session. It's not an easy session. Trust me, it's not an easy session. Brain does not absorb many concepts, but somewhere we have to start the journey. Today, 65 members I can see right now on the screen who has absorbed, and at one point of time there were 150 members who are trying to absorb it. So thank you very much for arranging this for our members. Thank you, Sanjay. Omar, thank you very much. It's your birthday. Wish you a very, very happy birthday and a blessed year ahead.
Thank you.
Thank you for taking out time for our members. Thanks a lot.
Thank you, everyone. If anyone wants to remain in touch with me, I'm sharing my LinkedIn here. You can add me on LinkedIn. Thanks for the birthday wishes. Thank you, Jay. Thank you, Sanjay, for the opportunity. And thank you, Jeet, as well.
Thank you,
It's been
Prakash.
great.
Happy birthday.
Anyone can
Thank
unmute
you. Thank
yourself. You
you.
can go ahead. You have all the permissions. If you want to say anything, you can go ahead and you can unmute yourself. But permissions have been given. Thank you.
Happy birthday, Umar.
Thank you.
A very happy birthday to you, Umar. Have a
Thank you.
wonderful rest of the day ahead, and thank you so much for the wonderful session.
Thank you. Have a good day.
Sanjay, send 1,000 Bitcoin to him as a birthday gift.
Thank you, Dharma.
I'll accept just one. One is okay.
Thank you, everyone. Thanks a lot. We'll close
Thank
the session
you.
now if no one has to say anything. Thank you
Thank
very
you,
much.
Dharma.
Thank you, Sanjay ji. Thank you, Umar. Enjoy your night. Enjoy your dinner.
Thank
Thank
you.
you. Bye.
Thank you,
Bye.
Mr.
Thank
Chimas,
you.
again.
Thank you. Thank
Yes.
you.
Thank
Bye.
you.
Thank you.
Thank
Bye.
you. Thank you, everyone.
Thank you. Thank you.